Related parties, members of the HUF. Now when you go to visit some religious places, especially your Prime Minister's the city where he has been elected, when you go to those places, you are always find a person who says that, okay, I can find out who your relatives were. He has a big book with him and he can tell you who your relatives were. I think most companies will have to keep such a person with them. Because only he can tell you who are members of your HUF. Right? So this is something which we are advising the big corporate groups. Please keep one of those persons, get him from Varanasi and put him in your office, or go and visit there whenever you want to see whether you can make a transaction with the person or not. We also have to deal with this new definition of key management personnel, which refers now to a CEO or a managing director or a manager. A company secretary is also now key management personnel. Because he also now, all these people are important because all these people can be imprisoned. So this KMP definition is very important now, because, and there is a list which also can be added on because they can prescribe more officers also in this. But company secretary and CFO automatically now become key management personnel. You have to be careful on this because there are a lot of conditions which are there in reporting or disclosure on key management personnel. Now, so far, company secretary is not someone who would ever you would keep in mind as a key management personnel, but now it is part of the definition itself, or a CFO. So, when you will give AS 18 disclosures, you will have to now remember to add on all these people also as key management personnel. Having seen the definition of relative, what is a related party? So, there are three things. One is who is a relative, second is what is a related party, and the third is related party transactions. So relative we have seen, this is related party definition. A director or a KMP or is relative. Now this itself is wide. You can be a director, you can be a KMP, which means those 5 people, or any of the relatives. Now what is relative? That's a wide definition. Any one of them can become a related party. Firm in which director, manager or his relative is a partner, again a related party. Private company in which a director or a manager is a director or a member. Public company in which a director or manager is a director and holds along with his relatives more than 2% of the paid-up share capital. This and was earlier or. It has been converted into and by that notification under section 470. Any body corporate whose board, MD or manager is accustomed to act in accordance with the advice or instructions of the director other than in professional capacity, and any person whose advice you are accustomed to act other than in professional capacity. All these are related parties vis-a-vis an individual. When you look at a company which is a holding subsidiary or an associate company of a such company or a subsidiary of a holding to which it is also a subsidiary, they are also related parties. And the rules also prescribe that a director, KMP of the holding or his relative is also deemed to be a related party. If you really want to tell someone or really want to harass someone, you please tell him who is removed or who is excluded from this list. You give a list of your transactions in the company and tell who is excluded from this list of related. It's a very wide list of related parties as such. Now, this is the issue I think which has been printed or circulated. We have got this X and Y Limited, 2 public companies. A is a director on the board of X and Y. Wife of A holds more than 2% of the share capital in Y. Besides this, no other relationship between 2 companies. Now will X and Y be related parties? You have to obviously answer this based on the earlier definition which is there. Is the answer printed?
Yes. Yes.
So each company has to do its own independent evaluation. The view therefore is, for X Limited, Y Limited is a related party since it's a public company in which A is a director and he also holds more than 2%. So from X's point of view, Y is a related party, but if you look at the other side, it is not a related party. So there is no reverse shareholding. Okay? So when you say related party, you have to first ask from whose angle you are asking whether it's a related party or not. In this example, which is a very simple example in that sense, Y is a related party to X when I am preparing accounts of X, but in the books of Y, X is not a related party. So if you are doing the audit of both, don't assume that the reverse also will be true. because it may not always be true, because these conditions work sometimes only one way, especially if they are public companies. The answer will change when one of them becomes a private company, which is there in the next. Same facts except that X now is a private company. Comment whether they are related. For X, Y is a related party, there is no change. Y is a public company in which A is a director and holds along with his relatives, so that is related. But for Y, X is now a related party because it's a private company. X now becomes a private company, so therefore it becomes a related party to Y also. But if X was a public company, it would not have become a relative to Y, as we just saw in the earlier example which was there as such. So in several residential courses, you will have only this case study. Please find out whether who is related to whom. And I am sure if someone at houses look at the case studies, you are only talking about relative after going there. What you are doing in your RRC, you are only finding out who is related to whom. Now to compound this definition, you also have for listed companies clause 49 of the listing agreement, which is obviously applicable only from October, but this is notified, this is not in a draft stage or something, it's a final notification applicable from 1st October. And they define related party in a still broader way. If you see the definition of RC 49, RC to a lot of people means a different thing, but for our discussion today, it only means revised clause 49. A related party is a person or an entity that is related to the company. Parties are considered to be related if one party has the ability to control the other party or exercise significant influence over the other party directly or indirectly in making financial and or operating decisions, and includes the following. So it's a very broad definition. It covers practically everyone whom you can influence. So a person or a close member of that person's family is related if he is a related party under section 276. So obviously all those covered under Companies Act are automatically related parties even under RC 49, but it includes some more people. It also includes has control or joint control or significant influence over the company, or is a KMP of the company or the parent company. KMP takes the definition now from Companies Act. An entity is related to a company. Now related party, you have to look at two levels. One is at an individual level and one is at a company level. Same as in related party 273 definition. Here, for a company's angle also, first you see whether it is related under 276, then it is also related under RC 49 and other things who are also related. Entity and the company are members of the same group. One entity is an associate of the or joint venture of the other entity. Both entities are joint ventures of the same third party. One entity is a joint venture of a third entity and the other entity is an associate of the third entity. In fact, covers almost everything. You can see the list which is available. Entity is a post-employment benefit plan for the benefit of employees. That also is a related party. Entity is controlled or jointly controlled by any person identified in 1 above. Person identified in 1B above has significant influence over the entity or of the parent of the entity as such. Now with that, RC 49 provisions, it is very simple to actually answer these things. What is related and what is not related. I think if your answer is related, 99% you will be right. So in this case, X, Y is a related party as per RC 49 also. And the answer is obvious because I am related in 276 itself. So I don't need to again relook at RC 49 also. And for Y limited, it is not related. Since in 276 it is not related and there is no common directorship which is covered in this. You can still come to some such situation where one is related, the other reverse is not related as such. But it will take a lot of planning to decide all this. You want to structure some transaction where one is related to the other, but the first one is not related to the second one. It will require a lot of planning based on this combination of these definitions which are there as such. So if a company A is holding in two companies, B 50% and C 35%, D has only a holding in B. Now we have to only answer who is related to whom. So we have to actually look at this from 4 angles. From A's angle who is related, from B's angle who is related, and so on. So all those are answered here as per Companies Act. For company A, C is an associate and thus a related party, and company B is a JV. Thus both are related parties. For company C and B, company A is not a related party. But the reverse will not apply as per Companies Act. On the same basis, for company D, B is a related party. For company B, D may not be a related party. You can look at this maybe at home or maybe on your way back. You will get good sleep also. And as per RC 49, all the above will be related if covered under, or since they are covered under 276. For company C, A is a related party, B, A and D both are related parties, and B and C are related parties. So RC 49 is actually broader, except maybe in some cases you may still be able to get out of it. Otherwise RC 49 is even broader than this Companies Act definition of related parties. If you look at the AS 18 definition of related parties, it does not cover lot of these relationships. For instance, if there is a PSU, two PSUs are not covered as related parties by AS 18, but now they are automatically covered. So you will have to now start giving the list even in a PSU. Though as such, AS 18 exempts transactions between two PSUs as related parties as such. Now, we saw that there were four things which have to be done in related parties. We'll just go back to that slide. I think done just the first thing so far. You've done the identification, transactions, approval process and disclosure. Now we come to the identification of related parties. Now here again we have to look at both section 188 and for listed companies the revised clause 49. Section 188 deals with related party transactions with reference to the following. Now obviously, when you say you are related party, which transactions do I need to report? Which transactions do I need approval? Now I have to identify those transactions. And the transactions for which I have to go through the process of approval under this section are given here in section 188. Sale, purchase or supply of goods and materials, selling or otherwise disposing of or buying property of any kind, leasing of property, availing or rendering of services, appointment of agents for purchasing goods, materials, related parties appointment to any office or place of profit in the company or subsidiary or associate, underwriting the subscription of securities. As per RC 49, it's a simple thing, it's a very broad thing again. It's a transaction, it is a transfer of resources, services or obligations between a company and a related party regardless of whether a price is charged or not. Now this actually is very broad and it can even cover something like if you have a corporate group office at one place and you have got 100 offices or 100 companies registered at that place, 10 small private limited companies who are also using that office, that itself becomes a related party transaction because you are using the office without charging any rent. Or they are using the office without paying any rent as such. That itself can become a related party transaction because there are resources which are used of the parent company by those companies and you are not charging a price for it. Regardless of that, they can still get covered under revised clause 49 as such. In the approval process, there are different thresholds for approval process. There are monetary thresholds which are given under section 188 that except with the consent of board given by a resolution at the meeting of the board and subject to such conditions which may be prescribed, no company can enter into a contract or a agreement with a related party. So if your capital is equal or exceeding 10 crores, you need a special resolution. If your transaction threshold crosses this 25% of annual turnover, if it is sale or purchase or supply of goods, then you need a special resolution. And all these thresholds are given as such. If you cross this threshold, you need a special resolution. For instance, if you are trying to appoint your relative on a remuneration which is exceeding 2.50 lakhs per month, then it needs a special resolution. Okay? And a related party cannot vote on such special resolution. Section does not apply to transactions entered into by the company in ordinary course of business other than transactions which are not on arm's length basis. Now this is all encompassing proviso which is there. But this section does not apply if your transaction is in the ordinary course of business unless it is not at arm's length basis. So if your transaction is in the ordinary course of business and at arm's length basis, all this discussion which we did does not apply. It may be a related party transaction, but you don't need to go through this approval process, special resolution and other things. We will come to how to identify such things, but this is a provision which is a good provision. How to implement it is a very difficult thing, but this is as such a good provision which is there. That if your transaction is in the ordinary course of business and also on arm's length basis, I don't need to follow the rigorous conditions of section 188 as such. And you need an audit committee approval for all transactions, whether covered under 188 or not covered under 188 as such. So this is irrespective of whether they are in ordinary course of business or at arm's length or reaching share capital or transaction threshold values. In fact, in some audit committee meetings in the month of May, some audit committee members came and told us as auditors that now your responsibility is very tough because related party disclosures, related party transactions, it will be difficult for you to find out those things. The only answer as auditors we gave those members is it is not difficult for us because the first responsibility is with the audit committee and then it comes to the auditors. So if the audit committee approves it, we have no problem. We have already a backing available that the audit committee has approved this. Oh, is that so? So immediately told the CFO, from the next meeting, please let us know everything what you are doing. So I think this is a good thing. Audit committee has to be made aware of each and every transaction with the related party, whether arm's length or no arm's length, whether big or small, whether crossing threshold or not crossing threshold. It has to go through audit committee, then it has to go through the board of directors. The auditor comes much later on because auditor comes only at the year end. So I think this is a stand at least we are taking with all our bigger clients that you first approve everything yourself. We can help you in setting up a process, but the responsibility lies with the audit committee and the board of directors. The auditor comes much later on. And this is the factual situation. It is not something that we are trying to put it across to them, but this is a factual thing that since you have audit committee approval required for this, all listed companies will have to first go through this, then only the auditor does it. Otherwise, it is not going to come to auditor also. You have some issues which are there. What is meant by ordinary course of business not defined? We also saw that in the loan section 185, you are allowed to give loans to a subsidiary if it is in their ordinary course of business. Now, this is not defined, but obviously there would be again some legal opinions given here. What is ordinary course of business? What is not ordinary course of business? But there are some pointers which are there. Say for instance, if you are doing something which is in your memorandum of association, that is obviously in your ordinary course of business. You may do it for the first time, but if it is already there in your memorandum, it's the ordinary course of business. Unusual transactions which you carry out are normally not in the ordinary course of business. So you are normally never used to buying and selling shares, but if you undertake such a transaction in an unusual way, that will not be in the ordinary course of business. So there could be lot of such pointers to decide whether it is in the ordinary course of business or not in the ordinary course of business as such. And mind you, the ROC or the FCA will take a final call what is ordinary and what is not ordinary. So we have to be careful, and again as I said, you should not try to be very adventurous in these things. It's better to be cautious at least for the initial years when the company law is new. The ROC and everyone is very eager to, as I said, to do some prosecution. So you should be little more moderate whenever you are deciding what is ordinary course of business. What is arm's length basis? In income tax we know what is arm's length basis. Correct? So in international transfer pricing, everyone says this is arm's length, but suddenly after the transfer pricing assessment, they find they have 100 crores demand because the officer says this is not on arm's length basis. Now, how do you know whether it is on arm's length or not on arm's length? Now, we believe that a transfer pricing study will need to be undertaken by a company even at a company law level. You already are doing a study from an international transfer pricing level for a domestic thing. You will even need a parallel study to be done because this is a study to be done before transactions are entered. In income tax we do a study after transactions are entered normally. So there would be a study which would be needed to be done by most companies to establish that a transaction is at arm's length. A question which was asked is why do you need such a study? The CFO can say this is arm's length. Audit committee, how will it know it is at arm's length? The CFO cannot just say that, no, we know that we have inquired with several people and this is the best rate which we have got. Now, obviously the audit committee will say, get me an independent opinion on this. And the independent opinion to prove that the transaction in arm's length is an independent study being done by someone as such. And there are several groups, bigger groups in the country who have already commissioned consultants. They are saying that in the last year, these were our transactions with related parties, could be in the same group or subsidiary or associate. Please tell us how to document all the transactions to prove that it is on arm's length basis, only for the purpose of giving it to the audit committee. The transfer pricing study and all will come much later on, but this is just to prove to the audit committee that this is on arm's length basis as such. And once the audit committee has it, they are safe. The auditor obviously can have two reports now. He said there is a study done, audit committee has supplied their mind and agreed to that study. So we have obviously agreed to the pricing which has been done for this related party transactions as such. So clearly in transfer pricing, lot of developments apart from income tax, whatever is happening, we will also have here lot of independent transfer pricing methodologies which can develop as such, which may be similar to income tax methodologies, which could be different from the income tax methodologies as such. Exemption from special resolution also is available if it is on in the ordinary course of business and arm's length or below the threshold limit. Requirements of RC 49. The thought we said was really 188. Now RC 49 says all RPT shall require prior approval of audit committee, and that is where listed companies auditors are much safer now because it's a prior approval of audit committee. And RC 49 is in that sense much sensible in this because they say only material transactions require approval of shareholders through special resolution, and the related parties shall abstain from voting on such resolutions. And materiality is defined by revised clause 49 as transactions to be entered into individually or taken together with previous transactions during a financial year exceeds 5% of the annual turnover or 20% of the net worth. So they have defined materiality in revised clause 49, but the Companies Act has not defined any materiality. They apply this section to all transactions. So again, you have to balance out in a listed company how to comply with revised clause 49, how to comply with the Companies Act requirements. So audit committee member will have to see both are compliant because he is equally responsible for both. For listed companies, RC 49 requirements stricter than Companies Act, especially as the definitions are there. To comply with RC 49, the listed company needs to get all related party transactions approved by the audit committee, and all material transactions also need to be get approved by the board and special resolution. For transactions which are not material, approval requirements are required only under the 2013 Act. They are not required under the revised clause 49 as such. So what is this issue? Whether related party transactions which are neither in the not in the ordinary course of business, not at arm's length, and not exceeding when the board approval is required, and the view is the board's approval is required by transactions that are either not in the ordinary course of business or not at arm's length. And this is because 188 starts with except with the consent of board, you cannot do these particular transactions. So if a transaction, as we said, is in the ordinary course of business but not at arm's length, you may still need the approval of the board. But if it is in the ordinary course of business and also at arm's length, then you don't really need the approvals required under 188. But under revised clause 49, even out of these transactions, whichever are material transactions, you will need prior approval of the audit committee and also finally of the board of directors. This is your simple chart of the approval process. That if you have a related party transaction, you will have to decide where you want to go or which approval is required. Okay? Before looking at this chart, look at this chart or this particular slide, which is a big relaxation. Till this came, related party transactions were also hit, or private limited companies also needed to follow this. Till this notification came before 2 days. Or this is a draft notification, that's more or less likely to be fine. So that is why people are a little relaxed now. Otherwise, this was applicable to private limited company. This is actually section 188, not just section 18. Now with that, if you see this chart, on the very right hand side you see 188 NA not applicable because that's a private company. But otherwise it applies across. Public companies it applies across. Okay. So you can decide whether it is at arm's length, whether you are listed, not listed. If you are listed, obviously there are some other requirements which apply. In our office has tried to make this yes or no thing. I believe it is in the right direction, whatever is there. So I feel I could understand it after 5 minutes I went through it. First time it will take some time, but second time you read this, it doesn't really take time to understand where you will fall. Okay? And I think this is already there with you. The final thing in related party transaction is disclosure. Having got identification of related parties, what is the approval process, finally whatever are the transactions you need to disclose. And you need to disclose in the board report all related party transactions along with that justification. In the director's report, which is there, you need to justify everything and give all the transactions. Luckily, it doesn't now apply to private companies. But in a public company, you have to give a whole list of related party transactions with that justification. I am sure it is now going to be very easy for income tax officer to just find out what are your transactions, and he will say this your justification. In fact, you can also say that the initial justification is already given in my return itself, because it is there in your director's report itself, your initial justification. Only further justification only need to be given as such. And whenever you go through a special resolution, you need an explanatory statement where you need to give all these things: name and nature of relationship, name and nature of directors, KMP who is related, material terms of the contract, or any other information which is relevant to take that particular decision as such. And revised clause 49 describes some additional disclosures. Details of all material transactions with related parties to be given quarterly along with compliance report on corporate governance. So this is filed to the stock exchange, but this is the disclosure which needs to be given. Once filed with stock exchange, it is public information. So you can get this at any point of time. Company shall disclose the policy on dealing with related party transactions on its website and also on the annual report. So on the website they will have to say how do they deal with related party transactions. So basically they will have to write on the website whether the transaction is on arm's length and how they decide it is on arm's length as well. Again, let us see what it comes out to, because so far I have not seen a website which has started giving this information. But we will very soon have a lot of companies giving out this particular information which is there as such. For CFO, audit committee and finally auditors, related parties is going to be a nightmare, because we are talking about 6 things which you are trying to deal with in a listed company. ES 18, 48 UB, we are talking about domestic transfer pricing, international transfer pricing, Companies Act and revised clause 49. And how do we integrate all these things? I really do not know which company will decide who is related, who is not related. Maybe a director or CFO will keep a big chart below his table that this is a whole list of companies or my individuals who are there, and he will pass a circular in the company that if the CFO or the secretary or anyone in the associate has an addition in the family, please let me know first, because they become related parties. So a lot of these things will have to be done. So I think that's it. Only 3 things which we really covered. We did cover it in detail. If you have any questions, you can bring them. We did try to anticipate a lot of questions which are there.
Friends, you all will agree that Himanshu, without a pause in his talk, he has run through all the slides and he has educated us and enlightened us on, I would say, deposits, related party transactions, and the loans acceptance and advance of loan. And the last few slides regarding related party transactions have given shivers to us, whether we are part of a company as an auditor